Hello guys, my name is Fariz Farhan Farid. Today, I would like to present my business analysis of Red Bull GmbH, a multinational company operating in the global energy drink industry. In this presentation, I will discuss the company overview, its financing strategy, financial performance, market structure and competition, government regulation and taxation, corporate social responsibility, and finally, my conclusion and recommendation. Let me start with the company overview. Red Bull GmbH was founded in 1984 by Austrian entrepreneur Dietrich Mateschitz and Thai businessman Kaleo Yuvidia. The idea originated from a Thai energy drink called Krating Dang, which Mateschitz discovered during a business trip. Recognizing its potential, the product was reformulated to suit Western consumers' preferences by adding carbonation and reducing sweetness. Red Bull was officially launched in Austria in 1987 and later entered the US market in 1997, where it achieved the remarkable success and quickly became the market leader. Today, Red Bull has evolved into a global multinational corporation. Although energy drinks remain its core product, the company has diversified its operations into sports teams, media production, and global events. Red Bull owns Formula One teams, football clubs in multiple countries, and various extreme sports platforms. This diversification strengthens brand identity and creates a unique competitive advantage that goes beyond traditional beverage companies. Next, I will discuss about financing and investment. Red Bull has a very distinctive financing philosophy. Unlike many multinational corporations, Red Bull is a privately owned company and doesn't issue publicly traded shares. The ownership structure is divided between the Yuvidia family, which holds 51%, and the Mateschitz family, which holds the 49%. This structure allows the company to maintain strong control over strategic decisions without pressure from public shareholders. In terms of financing, Red Bull doesn't rely on bank loans or corporate bonds. Instead, the company funds all of its operations, expenses, and investments using internal cash flow generated from its business activities. This conservative approach significantly doesn't face interest obligation or exposure to debt-related financial distress. However, this strategy may also limit the speed of expansion during periods of aggressive market growth, as the company depends solely on internally generated funds. Now, let's move to accounting and financial statements. Red Bull's financial performance reflects strong profitability and financial stability. In 2024, the company recorded revenues of approximately 11.2 billion euros, representing a solid increase compared to the previous year. Red Bull sold more than 12 billion cans globally, indicating consistent demand despite increasing competition and market saturation in developed economies. From the balance sheet perspective, Red Bull maintains a strong equity position with relatively low liabilities, demonstrating a conservative capital structure. The company holds significant assets, including production facilities, distribution networks, and highly valuable intangible assets such as the Red Bull brand, which is one of the most recognizable trademarks globally. The cash flow statement shows strong operating cash flow, enabling the company to finance investments and marketing activities without external financing. Overall, Red Bull's financial indicators suggest a high profitability, strong liquidity, and effective cost management. It means the company's long-term strategy of prioritizing brand building over short-term profit maximization is worked out. Next, I will explain the market structure and competition. The global energy drink market is best described as an oligopoly, dominated primarily by Red Bull and Monster Energy. Together, these two companies control more than 65% of the global market shares. This market structure creates high barriers to entry, including strong brand loyalty, extensive distribution networks, and high marketing costs. Competition within the industry is intense. Red Bull faces pressure not only from Monster Energy, but also from newer entrants offering healthier alternatives with lower sugar content or natural ingredients. To maintain its competitive position, Red Bull relies heavily on brand differentiation, innovation, and experiential marketing, rather than competing primarily on price. Let's move to government regulation and taxation. As an Austrian-based corporation, Red Bull is subject to Austrian corporate income tax, which is currently set at 25%. In addition, the company is required to collect and remit value-added tax or VAT at a standard rate of 20% on its products. Red Bull must comply with various regulatory requirements related to food safety, labeling, and advertising, particularly due to increasing scrutiny on energy drinks and caffeine consumptions. Next, the CSR. Red Bull CSR initiatives primarily focus on health research, environmental sustainability, and social engagement through sports. One of its most prominent programs is the Wings for Life Foundation, which funds research on spinal cord injuries. The annual Wings for Life World Run attracts participants from around the world and generates millions of euros in donation for scientific research. Finally, I will present my conclusion and recommendation. In conclusion, Red Bull GmbH is a highly successful multinational corporation with strong financial performance, a unique financial strategy, and a dominant position in the oligopolistic market. As a recommendation, Red Bull may consider selectively adopting moderate external financing in the future to accelerate expansions in emerging markets, while still maintaining its conservative financial philosophy. This is it from me. Wassalamualaikum warahmatullahi wabarakatuh.